have seen some profit booking in the global market. US market corrected for second consecutive day after the job data, which came weaker than expected. Even the US PMI data is lowest level of last 8 months. Bank of Japan recently hiked the interest rate, which is the higher than expected, and the Japan market has seen the faster decline post the COVID. So clearly the weakness is visible across the board.
The immediate trigger is the Bank of Japan raising rates on Wednesday. What happens is there is something called a carry trade, where people and investors borrow money in yen and they invest in currencies and in markets across the world. Now, yen has strengthened more than 10% in the last 15 days, and that is causing a lot of unwinding of this carry trade across the world. That is the first trigger. Wednesday, the Bank of Japan raised the rates, and that caused it. Second is the weak data points from the US. Their unemployment numbers are increasing. The job creation numbers are going down. Overall economy is getting softer. So the expectation is that the Fed might have overextended its restrictive policy, and now US might be set for a recession in the next 12 months. We do see outflows in the short term, but long-term story intact. Structural bull market is very much intact in India. This is a bull market correction that we are seeing, and I'm expecting that domestic investors will buy.
There is a lot of carry trade happening world over, Japanese carry trade, which runs into some trillions of dollars, and that is now getting unwinded because of the cost of finance has gone up. So what we are seeing world over in the global market is selling pressure because the trades are unwinding. This will continue for some time till again, the things stabilize. Far as India is concerned, I think India will be the first, the early one to stabilize, for the simple reason that we've seen a lot of foreign portfolio investors selling Indian equities, and we've seen money going out of the country. So I don't think we have such a huge overhang of carry trade, and that's the reason I feel Indian markets will be the those markets who will stabilize very early.
The market is still pretty much worried about the potential US recession risk. And in Asia, there is indeed a trend of the sector rotation. So there's a very clear path that Japan is definitely the market being affected the most. But there are also other tech-savvy markets, such as South Korea and Taiwan, also suffer a bit of the loss after reaching the new high in the past few months.